Nokia doesn't make phones anymore, but it still makes billions. Today, Nokia is no longer a consumer brand. Instead, it sells the technology that powers the world's networks, from mobile infrastructure and fiber connections to the software and patents behind modern connectivity.
This is a company with a 160-year-old history. It's really about making sure we're delivering market-leading innovation and delivering successful outcomes for our customers.
That's a very different company from the one most people remember, because for years, Nokia didn't just compete in mobile phones, it dominated them.
At its height, Nokia was a force to be reckoned with in the mobile phone industry.
But the smartphone era changed everything.
When iPhone and Android entered the phone business, it made it really difficult to understand who are Nokia's main competitors.
In 2013, Nokia made a dramatic decision. It announced the sale of its handset business to Microsoft. But Nokia didn't disappear. Behind the scenes, the company still had something extremely valuable.
The asset they had was networks, so they had no alternative. They had to lean into it.
Decades of expertise building telecom infrastructure and a portfolio of patents worth billions. So, how did Nokia go from making phones to becoming one of the companies powering global connectivity? I'm Arjun Karpal, and I've been covering the business of tech for more than a decade, from Silicon Valley to Shenzhen. In this episode, I'm looking at Nokia, not as the company it used to be, but as the business it has become. Reinvention isn't new for Nokia. Founded in 1865 as a Finnish paper mill, Nokia became Nokia AB in 1871 before expanding into rubber, cables and electronics. Its shift into telecoms began in the 1960s, accelerating after a 1967 merger that formed Nokia Corporation. By 1981, Nokia had helped launch the world's first multinational cellular network and was already building some of the earliest mobile devices.
They had fingers in all sorts of pies. They were looking at TVs, they were looking at mainframe computers, lots of other different businesses that they had.
But it was mobile phones that made Nokia a global giant. By the late 1990s, the company had overtaken Motorola, and by 2000, it dominated the global market with nearly a third of all mobile phone sales. That dominance drove extraordinary growth. Nokia was worth more than $290 billion at the time, making it Europe's most valuable company and accounting for a significant share of Finland's economy.
At their peak, 40% market share, an unthinkable chunk of a massive market, a powerhouse of a company. If you had a Nokia phone and you were talking to your friends, you would talk in terms of numbers. Have you got a 2110, a 3310, a 6110, a 5110? They were so omnipresent in the phone space.
Nokia had been successful for several years, and it had always won the game. If you had a Nokia business card, you could meet with the president and prime minister whenever you wanted, and this in itself created overconfidence and hubris in the top.
And that success would shape the decisions that followed. But by the late 2000s, the market was changing. The launch of Apple's iPhone marked the beginning of a new era, and Nokia's dominance started to slip.
And we are calling it iPhone.
Despite the initial skepticism towards the iPhone, it kind of quickly became clear that this was something. No one could really see it. So Nokia initially was like, yeah, we get it, it's kind of interesting, but we're going to be okay.
When the iPhone came out, Nokia's top management had very good understanding of its specifications and potential impact on Nokia's market share, and it put a huge pressure on the middle management. And because of that, they tended to embellish their communication or make over-optimistic promises to top managers or even distort their reporting. Top managers were constantly under the illusion that Nokia's response to the iPhone is almost ready for launch.
Having reported strong growth through the early 2000s, Nokia's business began to decline. Mobile phone revenue fell from more than $36 billion in 2007 to just over $20 billion by 2012. Over the same period, its share price collapsed, leaving the company with its lowest valuation in decades. The company that once defined the mobile phone era was suddenly struggling to compete, and in 2013, Nokia made a dramatic decision.
The deal getting all the attention today is Microsoft buying Nokia's mobile phone business for more than $7 billion.
Everyone's still buzzing about its Microsoft's $7.2 billion acquisition of Nokia's mobile phones unit.
Meantime, Microsoft buying Nokia's handset business for more than $7 billion.
But while Nokia's phones may have disappeared from the shelves, the company itself didn't. Behind the scenes, Nokia still had something extremely valuable: decades of expertise building telecom networks and a portfolio of patents worth billions.
The asset they had was networks, so they had no alternative. They had to lean into it.
It was striking that when Nokia sold their phone business to Microsoft, they were able to find a good home for the money they gained, and that was what they essentially used to fund that buyout of Siemens and bring the business back in-house.
In 2014, the year it sold its handset division, Nokia generated about $16.8 billion in revenue from its remaining businesses. But to scale that business, Nokia made its biggest move 3 years later.
Together, Alcatel-Lucent and Nokia intend to lead in next-generation technology and services with the scope to create seamless IP connectivity for people and things wherever they are.
In 2016, it acquired Alcatel-Lucent for 15.6 billion euros, dramatically expanding its telecom infrastructure business.
The acquisition of Alcatel-Lucent, which gave them optical and fixed network, so they became not just a wireless network player, but a broader player. It's a big diversification, because suddenly Nokia was in a whole load of different things that really look kind of similar, maybe to a finance person, but actually are fundamentally different kinds of businesses with different ebbs and flows and timelines.
The deal pushed Nokia into the top tier of global telecom equipment providers, increasing its market share to roughly 24%. Today, that infrastructure business is at the center of Nokia's strategy. Instead of selling devices to consumers, Nokia now sells the technology that telecom operators use to build and run their networks.
This is a company with a 160-year-old history. We're uniquely positioned as a Western provider of telecommunications infrastructure, but really making ourselves a global leader in connectivity infrastructure, which is our core focus and strategy in this new phase.
Since resetting its strategy, Nokia's business has stabilized. In 2021, the company reported $26.3 billion in net sales and $2.6 billion in operating profit, a margin of around 10%. And it has remained consistently profitable since. Even as the telecom equipment market slowed, Nokia reported $1.8 billion in operating profit in 2023, while its closest rival Ericsson posted a loss. That stability has helped Nokia rebuild its value. But the way Nokia makes money today looks very different from the past. Instead of relying on a single product, the company now generates revenue across multiple parts of the global network.
Today, Nokia is a business that covers fixed markets, so fixed broadband, also data center and optical connectivity, and also mobile networks. And they have a licensing business as well, which is very high margin, building on the IP they've built up over decades.
We have multiple markets to grow into, as well as our core telecommunications business and the evolution of mission critical and defense customers.
Today, Nokia makes money in three main ways. The largest is its networks business, building and running the infrastructure that powers mobile and broadband connectivity. That division generates the majority of Nokia's revenue. Then there's cloud and network services, helping operators manage and optimize those networks. But the most unique part of Nokia's business is its patents. With more than 26,000 patent families, including thousands essential to 5G, Nokia earns licensing revenue from companies across the mobile ecosystem. And because those patents are already developed, much of that revenue flows straight to profit. In effect, Nokia is embedded across the infrastructure of modern connectivity, from the networks that carry data to the technology inside the devices that use it.
This is a market that we're expected to now grow over 25% per year for the foreseeable future. So that's really where we see tremendous growth and scale. And that positions us to make the kind of ongoing investments in R&D, in manufacturing, in building the capabilities that we think will differentiate the company, but also enable our customers to be advantaged as they're scaling AI training and obviously inferencing applications, not just for what we see today with AI, but the advent of physical AI, which is coming.
Nokia is investing heavily in the technologies that will define the next generation of connectivity, from improving 5G to exploring what comes next.
Nokia's bet is ambitious. AI will be built into the base station. The real debate is around whether there is a business today or in the next 3 or 4 years for small mini data centers to run enterprise applications. And that's where the debate is at the moment. Nokia could make the market for AI RAN in conjunction with NVIDIA and yet not win out long term.
In the next episode, we look at how the company that once dominated mobile phones lost its lead in the smartphone era.
When the technology changed, things got more complex, and it was difficult for top managers to understand and accept that the capabilities that Nokia had were no longer optimal in the new conditions.
And in the final part, we explore Nokia's next big bet and whether it can compete in the race to define the future of global networks.
The whole future is AI native networks. It's going to be, we think, fundamentally different than what has been delivered with the prior generations.